right, guys, good morning. And this is talking about prorations. I'm just going to do a quick introduction here. You go to closing, there's going to be not just the price of the house goes over from one side to the other in payment. We got other little bits and pieces to do. And the one that we talk about here is the prorations, because the owner will have been living in a home that maybe the taxes haven't been paid yet. So the buyer is going to be paying the full year's taxes. It's only fair that the seller give the buyer the appropriate amount of taxes to the buyer when the tax bill comes in, that he can pay for them. So I'm just going to look at the items to prorate. Now, in Florida, taxes usually come out in 1st November. Well, they actually come out about September, but you can pay them in November. So it's very, very, very likely, unless you actually close on a house after November the 1st, that the taxes haven't been paid. So this is a typical sort of thing that we will come across. But one of the things you've got to learn, guys, is how many days in the month? 30 days has September, April, June, and November. All the rest have 20, 31, except, I don't know, screwed it up. But you know what I mean. There you go. The old knuckles. Remember to put those together. So as I'm looking at it, I've got January, February, March, April, May, June, July, put them together, August, 31, September, 30, 31, October, November, and December. Got to know that. Here's a typical example. How to prorate taxes that have not been paid. One of the things is, it says the taxes is going to say the sale date, is going to say what method you must use, is also going to say that the buyer owns the day of closing, which is usually the case. I haven't seen anything where the seller owns the day of closing, and I haven't seen anything where we use the 360-day method. So we know here that the taxes are 3467, and this is a sort of a timeline from the 1st of January to the 31st December. July the 23rd is the day of closing. But remember, the buyer owns the day of closing. The buyer owns the house that night. He's going to be sleeping in that house that night. So he has to pay the taxes for that night. So in other words, the seller will be handing over to the buyer the taxes from July the 1st to from January the 1st to July the 22nd. How many days is that? Here we go. 30 days has September, April, June, and November. So let's have a quick look. Well, the first thing I said do here was to define how much is a taxes per day. So we get that 3467 divided by 365, $9.50 a day. So the taxes on this home of $9.50 a day. We've got to now next work out how many days has the seller owned the property but not paid the taxes. So we've got to count how many days are there between January the 1st and July the 22nd. Don't get that wrong. That's a common mistake. If you include July the 23rd, then there's going to be an extra $9.50 on the total transferred over to the buyer. And that answer is going to be one of the wrong answers. So you can see here 31, 28, 31, 30, 31, 30, 28. 203 days. Therefore, we debit the seller, credit the buyer, 203 days times $9.50, which is $19.28. That's the answer. You know, there's a trick with this question. When you look at the answers, some will say debit the buyer, credit the seller. In fact, maybe two of them will say that. You can scrub those answers out straight away, as long as the taxes have not been paid. Then the other answer, and I've seen this so many times, the first answer may be debit the seller, credit the buyer, $19.28.50. And the next one could be something like debit the seller, credit the buyer, $19.28.50 plus that $9.50, which is going to be $19.37.38, because you added in that extra day. So be careful of those questions, but usually on these sort of questions, you can then eliminate them, two of the answers straight away. Hope that helped. Go and find some questions on that, and let's see how they work out. Thanks very much. Bye-bye.